Hello and welcome to the Global View on this Monday. Good to have you with us. All right, let's catch up with what's going on at a macro level. And US Treasury yields edged higher on Friday. The 2-year moving above 5% as futures price in rates for longer ahead of a Federal Reserve policy meeting this week. The 10-year yield up to 4.31%. Meanwhile, US consumers expect inflation to subside in the coming year, with the University of Michigan report showing 12-month inflation expectations fell to 3.1% in September, the lowest since March 2021. US import prices declined 3% through to August on a 12-month basis, their 7th straight monthly drop. And US manufacturing output barely rose in August amid a decline in motor vehicle production as industrial action saw workers walk off the job at GM, Ford and Chrysler. Factory output edged up 0.1% last month, while production was down 0.6% on a year-on-year basis, with motor vehicle and parts output decreasing by 5%. And the dip in US consumer sentiment pushed the US dollar lower, the Aussie trading at 64.4 US cents. Well, to get across what went on globally on markets on Friday, and for a look ahead, I caught up with Brad Gordon from Hobson Wealth out of Auckland.
Flexing finish to the week, but I think there's probably four key issues that are sort of hanging over the market right at the moment. And firstly is China and the weak data out of China, and also the trade relations between the US and China remain strained. So there's I think that investors are worried about that. Second one is obviously the union strikes with the major motor companies, Ford, GM. This is the first time that all three major car makers have been impacted by a single strike, and with the President Joe Biden putting their support around the union workers, I think that's created a significant amount of uncertainty. And then also you had some strongish data out of the week, just probably taking the momentum out of the disinflation story. And finally, housing market is relatively weak. So it's just probably a combination of those four key points led to some selling towards the end of the week.
Yeah, interestingly also, those chip makers led the losses there. Seems to be on news that Taiwan Semiconductor has asked its suppliers to delay delivery there on signs of weak demand.
Yeah, well, I think we're not seeing demand strong across all parts of the semiconductor industry. So, the PCs and some of the older network demand is still quite slow. It's very much in the AI, which is quite a niche part of the market still. And so obviously with Taiwan looking to onshore into the US, it's having to manage that demand profile.
Brad, how's the market open there today?
Well, relatively weak start. We had quite a strong finish actually in the end with the week that was. But look, New Zealand, we're heading into an election in 3 weeks. We've got quite disparate left and right, big gap in the centre. So it does now look increasingly like a change of government is going to occur. But until we see that final detail, I think New Zealand market, housing market, economy is in a little bit of a state of malaise until we get through that October 14th.
Should there be a change of government, Brad, what's that likely to do to investor sentiment, do you think?
Look, if there's a change of government and it moves to the right, to National and ACT coalition, possibly with the New Zealand First party as well, that will be positive for the market. They're very pro foreign buying for property. They've come up with policy to tax foreign buyers and more than welcoming them in. At the moment, our government is very, very anti-foreign buying. It should be good for infrastructure build and more business friendly. So I think the market in general will react positively if that occurs.
Let's get stock specific then, Brad. And this morning news that A2 Milk has cancelled its exclusivity deal with supplier Synlait.
Yeah, this is a significant announcement. And I think if you probably look back to the A2 Milk buying into Mataura Valley and their own production facilities 2 or 3 years ago, I think this is probably no surprise, but they tend to be they appear to also be leaning into Synlait's ability to deliver in full and on time performance. So um, th- this is going to be a long, drawn out issue. It looks like the parties will need to go um, into arbitration in order to resolve this, but um, A2 look like they want to certainly have some flex around their production facilities, and given that they bought in Mataura Valley 2 or 3 years ago, then it sort of makes sense that they want to in-house production where they can. Not good news for Synlait.
No, indeed. And I mean, I guess it comes to that broader picture of what we're seeing there, particularly for A2 milk selling into China, given the issues with demand.
Well, yeah, one of the issues and one of the reasons or the investment cases for Synlait is that Synlait hold all the licenses for production. A2 also own 20% of Synlait, so they do have skin in the game. So this is quite a unique um, sort of negotiation with A2 milk impacted financially if Synlait shares fall significantly. Maybe the cynic suggests that a lower Synlait share price makes it more attractive for A2 to make a full takeover bid. But with the cornerstone shareholdings up in China as well, that makes that difficult.
Elsewhere, Brad, an update from the retailer Briscoe. What's that revealed?
Yeah, well, Briscoe is a homeware retailer in New Zealand, the largest, very, very well managed by Rod Duke and family interests. It looked quite an incredible performance. I mean, it obviously did really well through the COVID, and it's going to take some time to get back up to those sort of lofty levels of profitability. But it reported its results and it's holding up incredibly well. Net profit at 42.75 million, sales actually increasing slightly. They have got costs, they are incurring higher costs, one, security, and two, paying living wages for staff, but maintaining margins very, very well in what is a difficult retail environment. This is a high quality company.
Yeah, when you talk about that difficult retail environment, and we're seeing that on this side of the ditch as well, Brad, what distinguishes Briscoe then, given perhaps where others are struggling?
I think there's probably some defensiveness to the homeware market. People will, particularly when when things are slow, they're still going to protect their home. But two, it's just a really well managed business. I think you just take your hat off to Rod and his management team. They manage that business really closely, and they've got some good market positioned presence here, and they buy well and have managed to maintain margins. So I think it's quite a unique business in that regard. It's just very well run.
Brad, just looking ahead for the week, I guess the key event, globally at least, is certainly going to be that Fed decision.
Absolutely, yeah. Likely Fed on hold. Interest rates are the key to market sentiment, but maybe after that Fed announcement, you'll see some bid come back to the market. I think markets feel like they're oversold at the moment, and they're just waiting for a couple of breaks. And this auto union strike, that one also needs to be resolved, I think.
That is Brad Gordon from Hobson Wealth out of New Zealand. All right, well, that is the global view. Stay with us. The open is just around the corner. We are expecting a lower open. There we can see SPI futures off more than 0.5%. Stay with us.